So that's why I can make fun of him, because we made it this far.
There you go. And any words of wisdom being married this time?
Rich always said, and I totally agree, be curious. Be curious, ask questions, especially for guys. Ask questions to your lady.
Yeah.
Tell me more. What do you mean by that? Wow, okay, what else?
Yeah,
and that's all you have to do.
That's not something that comes natural
No,
to
it
us.
doesn't.
That's something that is definitely learned.
You will have great sex if you just do that.
Just ask questions.
Just ask, tell me more. Wow, that's so interesting. What else?
You know what? One of the best pieces of advice I was ever given, and it didn't even come from an individual. I think it came from like TikTok. It was a guy basically saying, I have figured out the code to a good relationship. And so when his wife is telling him about something, he starts by saying, is this something that I'm just listening to? Or is this something you want solutions for?
Ooh.
And he says that first. And then 9 times out of 10, it's, I just want you to listen. I don't want any
No
you
feedback.
should try this.
Yeah.
I just want to get it out. And I tried that with my wife one time, and she looked at me like I was a foreign being. Yes. Like, I love that. That was huge. So anyone, needing some advice as a man, that was a big one for me.
That's good.
Okay, so I want to start this one because in my story, you were actually very relevant, even though we just met about a year ago. 2014, I started really, really investing in real estate.
Yeah.
Specifically, I was doing a lot in storage. 2015, I sold my last business that was a brewery. And then 16 is when I started, working at, what the next business was going to be. And then, I wanted to do a, private equity real estate firm and focus on multifamily. And I was consuming a ton of podcasts and books. And I discovered your real estate news for real estate investors.
Yeah.
And it was like these short, 5 to 8 minute, I don't know if it was daily, but it felt like it was just constant little hits of quality information. And then I ran into you at McElroy's real estate conference, and someone was like, that's Kathy Fettke. I was like, I've been listening to her for years. So it's a pleasure to meet you. Just tell me about the podcast. It sounds like you were maybe early on doing a podcast, and you kind of knew what your niche was and how you were going to deliver it.
I was so early. I was podcasting before there were podcasts. But I really wanted to have a TV show. That's how it started. And I was going to LA pitching this concept. I was a coach. I was helping people kind of live their dreams. And it just wasn't getting anywhere. And then I kind of gave up. I remember going outside and saying, all right, okay, if this is not meant to be, that's okay. And then I just had this what about radio? And went to my laptop, looked up. There was a brand new station in San Francisco called KNEW, called them. It was like my background's in broadcasting. They're like, great, we're looking for a host. It was like that. So I had a show on coaching. It did okay. It wasn't great. But then Rich got, I say not great because I was learning and I was babbling, and that's what a lot of people do. They talk too much in the beginning. But right around then, Rich got a diagnosis of melanoma, told he had 6 months to live. The doctor's wrong. He's healthy today. But that changed everything. And I immediately changed the topic to how do I make passive income? Because I thought if during this difficult time, and if the doctor was right, I wanted to be home with our children and not working all day. We didn't have enough savings for me to be a stay-at-home mom if the doctor was right. So I just shifted the show content to how do I make money and lots of it and passively? What is this thing? I've heard about it. I don't know anyone who has it. And all of a sudden, my audience took off too, because apparently they wanted to know. So that it started with the radio show, and then Rich was big into iTunes. Well, he was big into Apple, so he had the iPod, and he's like, "Oh, look, the iPod now you can upload your shows." It wasn't even a podcast; it was just like you could upload your stuff. So we uploaded my radio show, and I was maybe one of the first podcasters.
Oh, that's so awesome. Okay, so going into passive income, because this is something that everybody loves the concept or idea of.
Yes.
What have you found that is not told about passive income, like a, what would you say, myth, like a myth that you discovered, you busted when learning about passive income? And then what do you think is a reality that people can expect when they're pursuing this journey?
That's a fabulous question, and no one has ever asked me that. That is such a good question.
Look at we're
that.
NBDs today.
I would say, just looking back, that you have to really have money to have passive income. And I've been telling people for years, you don't have to have a lot of money to invest in real estate initially. In fact, there's a lot of people who have built real estate portfolios with almost none of their own money. So real estate does give you the ability to get in the game and acquire assets with very little or none of your own money. But to create it passively, that's an active business. That's like finding an old house, getting someone to lend you the money, working on it, making it nice, hopefully making money on it, and now you've got a chunk of money. But you worked for that, so it's just the same as if you had any other job. You're working, it's your time. Passive income means you're not working for that. So what can you do? Well, either you can take a big chunk of money and invest it in anything that it could be. These days, treasuries or bonds or whatever. You can even just put it in a bank these days and make a return. But it basically means you're not working. So some of the way, Rich and I just wrote a book on this called Scaling Smart. You can build businesses that run themselves and create passive income. You can, build that business and sell it, have a chunk of money and invest it in something that gives you passive income. But you're not going to get it right away. Unless there's something I'm not seeing, but I haven't found a way where you can just kind of like quickly, without any money, suddenly have passive income.
Do you remember what your first size investment was in real estate?
25,000.
25,000?
It was small.
Do you remember what yours was?
0.
Oh, because you started active. Is it?
No, I solved a problem, and that's one way, right?
Talk about that.
Yeah.
That's brilliant. Okay.
Yeah, but, the secret to real estate is just being able to solve people's problems, and that's how you can get a deal. In this case, Rich and I had just gotten married. It was 1997. We were broke. We were both starting businesses. We had no money. We had 2 children, and my dad and we were renting what we call the spider house, because I don't know if you've ever had a spider house, but it's hard to get rid of those. It's real hard. They were everywhere. We'd put out the ball. Anyway, it was an old gross rental property, and my dad called in a panic and said, "I've got a problem. I invested in this syndication." This was like I said, 97. It's like, "I invested in this apartment building in San Rafael, California years ago. I've been depreciating it all these years, taking these tax benefits, and they sold it." This is kind of before email and internet and text and all that. And he's like, "I got a letter in the mail." So how long does that take? He's like, "I was on vacation. By the time I got the letter telling me they sold the building, I have 2 weeks to find a replacement property or I'm paying all of these back taxes." So many people don't realize that when you take these tax benefits from real estate, if you sell the property, there's recapture. You gotta, it's
Gotta change.
You better either exchange into something else or be prepared to pay those taxes. And he was unprepared. He was planning on retiring that year, and all of a sudden, he was faced with hundreds of thousands of dollars of back tax that he would have had to pay and not be able to retire. And this is a man who worked his whole life, and I was like, "Just break it to me, break it down easily. What are you asking me?" He's like, "Can you find a property?" Well, yeah. Sure. What kind? And he's like, "Something I don't have to worry about. I want to retire, but I don't want to be a landlord." I'm like, "Well, Dad, I'm renting. How about I find a house and I rent it, and we take care of everything, so you never have to worry about it. And then someday I inherit it, And because Rich and I had no idea how we'd buy a house in the San Francisco Bay Area, like that was not in our even consciousness. So he goes, "Great." So we ended up finding a huge house that met the exchange. It had to be like $550,000, which right now sounds like nothing for San Francisco. But for the East Bay where I was, it was a lot. It was higher than the average price in the area. But it was so big that my creative mind could carve it up. I was already living in a crappy place. So it was like, I'll just live in this corner and we'll rent out all these other rooms, what's now called house hacking, and we'll be the landlords of it all, and that income will help us pay for it. So within, I think that day, I found the property, called my dad. He came out. He's like, "This is perfect. Are you sure you can handle it?" I'm like, "Yep, I can rent out this office here. I can rent out this in-law unit that's here. The room in the back has an extra entrance. I'll put a little tiny microwave and mini fridge in there, and we'll just turn it into a 4-plex. He said, "Okay." That was the deal. So I saved him hundreds of thousands of dollars. He had the 1031 exchange. I got to live in a beautiful home that we could manage. And then when he passed away, maybe 10 years later, we inherited that property and all the back taxes were waived.
Right. Okay, so Michael got in 25,000 first investment. I think my first was, around 40 or so. Kathy got in at 0. The one thing I want to add to it, because that was done with your parents, and maybe for our listeners, they may have heard that as, oh, okay, well, if your parents are able to do it, that's how you can get in for 0. That's not the case, actually. There are a lot of people that will create syndications where the group of people that sit on the GP, you can take a percentage of that GP based on what you're providing to the team, right? So if you're the one who's going to get the deals, or, you're the analytical or operational type, or you're the person that has the relationships and is going to kind of bring the capital, et cetera, to it, that can earn you a percentage of equity in that, which can then in turn turn into passive income, right? You're just taking an active role to then have passive income come in without money, right?
There are so many ways.
Yeah.
There are so many ways. It's just solving problems. This happened to me, my dad's problem, but people have problems all the time. What about people who have health issues, or they lost their job, or something, there's a divorce and they've got a property. A lot of times it's an inheritance. Somebody inherits a property and they're like, what am I going to do with this thing? It's in Ohio. I live in California. So there are so many ways to solve people's problems. And when you can learn first, number one is learning how to do it. And then once you find the deal, there's plenty of people who will fund it. That's what people don't understand. You don't have to go to a traditional bank that's pretty strict on their underwriting. There are private lenders that will charge more, but if you've got the deal, they'll fund it.
Yeah.
We do it. We do private lending.
Yeah. Yeah. I had somebody a long time ago ask me, he's like, oh, you're in finance. Like, what's the definition of money? Right. And I was like, oh, money's a tool and it's used to barter, like more of like I gave him the obvious answer, right? And how he responded to it was actually maybe my favorite definition I've ever heard somebody explain money as, is it kind of touched on the point you made. He was like, no, money is only a representation of your contribution to society, right? And if you look at money as the bigger contribution you can make, or maybe aligned with what you said, the problem that you can solve. So if you can solve a bigger problem, or you can solve a lot of little problems at scale, you then have the opportunity to make more money. And I think when he said that, that was probably the best business and kind of financial advice that I heard in a very simple term, that I went, oh, you know what? That is the secret to making money. It's just solve problems. And if you can do bigger problems or more people, you have the opportunity to make more money. It was pretty cool. As far as real estate right now, are you guys buying right now? Are you guys on the sidelines? What's your overall outlook of the current market?
I've always been a contrarian, and that's how you find the deals, is you do it what everybody's afraid to do. And unfortunately, my background is in the news, and unfortunately today there's so many more news outlets than there ever have been, and individuals are now becoming experts in things they don't really necessarily know a lot about. So today there's just a lot of misinformation and a lot of people saying things, including the mainstream media, but also all over YouTube, that just don't truly understand real estate. Or anything, a lot of topics for that matter. But when it comes to real estate, generally, first of all, the headlines are meant for home buyers. They're not meant for investors. Headlines today aren't talking to you or me. So they give me a clue because what they're talking about the first-time home buyer. So the minute I heard that rates were going up and that this was going to be harder for people to buy a home because also prices are high, well, there's another opportunity to solve a problem, right? The problem being people need a place to live and they can't afford to buy, but they still like a place to live. And the largest group today, the biggest population that we've ever seen in this country, is at first-time home buying age, right at a time when it's the hardest ever. And so what can you do about that? You can solve a problem. And that's what we did. We immediately, when the world was frozen and like, real estate's going to crash, and I'm looking at the data saying, no, there's 15 million families being formed right now who want a place to live. We can help them. So we went in, I started a fund. We went in and bought older homes. There's a lot of people who think, oh my gosh, investors are going in and taking all the inventory. In our case, we are taking the inventory that a first-time home buyer couldn't get because they're dependent on a loan, and a bank is not going to lend on a problem property. They're not going to lend on a property that doesn't have a kitchen or has, foundational issues or something like that. So we raised $8 million and went in and started buying properties in and around North Texas, where there's just tons of jobs coming in, not enough housing. We were buying, because the market stopped and absolutely just froze and everyone was afraid to buy anything, we were the only ones making offers. Just months after there were 100 offers on every property. Suddenly, zero. It was just us. We were getting stuff for 50 grand. We're putting 50 grand into it, 100,000 in. These properties are probably worth 250 to 300 just a year later. We are able, because we got in so cheap, because we renovated really well, but on a budget, we're able to provide affordable housing in an area where jobs are coming in and people need that housing. So no, we're all in. We're all in. We're in this type of market because interest rates have been high. That causes other problems where, as you know, people who weren't reading the tea leaves and weren't seeing their interest rates wouldn't stay at 2% forever. That was not going to happen.
Yeah.
They're in a world of hurt. So you could come in and help them. And in one case, we found a developer who did all the hard work, all the heavy lifting of getting roads in and utilities and trying to build a residential community, and rates went up and they ran out of money and they couldn't finish it. So we came in, we have an option on the land. We're kind of JVing with them where we're going to get it done. I raised the money to build out the homes that he couldn't afford to build. And then we pay him for the land when it sells.
Right.
So he'll get his money then, but we didn't have to develop the land. We didn't have to buy the land.
Right.
We're just doing the JV with him to get his project to the finish line and provide that housing that's so needed.
Yeah, that's actually a really important point, that when you're buying something distressed, that's your opportunity to get it at a discount, but you don't have the same lending options as you would on a stabilized property.
Right.
So, when you talked about interest rates moving and the people that weren't planning for that, and I want you to speak on this after, because this is where we saw a lot of deal flow from. A developer is typically going to come in and they're going to get a bridge loan, right? This is like a 3-year loan with maybe an extension or, a 2-year beyond that. And if they were planning on interest rates being at, let's say on the commercial side, 5%, 5.5%, when they were going to refi 4 years later, well, when they're at 8 and, a lot of the lending market pulls back, they're now all of a sudden not qualifying for their permanent finance. They can't get out of the bridge debt. And so there were a lot of good deals that had become distressed and developers needing capital. And so we saw a lot of rescue kind of funds be spun up, a lot of pref equity funds. But what I want you to talk about is 2023, we saw a big uptick in deal flow. We have a very similar outlook to you. We are contrarian thinkers. So when everybody's bouncing, we're going, where are they running from? And we're heading straight to the fire. Correct. And so we had a scenario where there were a lot of deal flow, but we have a lot of retail investors, and they were actually doing something different than what we are doing. So why don't you talk about the beginning of 23, us having a ton of deals and what the capital was like at that moment?
It was tough. It was very tight because for us, a lot of the retail investors, they were buying into the headlines that you were referencing earlier. They were seeing doomsday is coming, Armageddon's coming, everything's going to crash, stifle all your money, reserve as much as you can. And they were looking at us saying, you guys are out of your mind. What are you thinking going out and trying especially because for us, we're hyper focused in Southern California, and that's driven, like you said, on statistics, right? The data doesn't lie to us. It tells us that we are in a state that is vastly undersupplied in terms of housing, and we need 3.5 million units in this state just to get to the point where we meet supply and demand.
Just in the state.
It's crazy when you break it down, but
Whoa.
because we have a lot of retail investors, they are investors that tend to be more driven by news, right? Yeah, and so, ask 10 investors what they think about investing in California, right? 7 of them are going to say no way, right?
Yeah.
So, but that has an effect, right?
Yeah,
like what type of opportunity is created by 70% of investors saying, I'm not investing in that state.
Right.
Right. And so a lot of them were looking at us thinking that we're crazy, but there were some of them, and this is why it was a little challenging for us to raise capital at the time, because we were talking to a pool of people where a fraction of them understood what we were explaining to them.
Yes.
That said, well, hold on a second. That makes sense. Let me look past the headline of the politics and the costs and the challenges. If there is a problem with the supply shortage and you guys have the solution to that problem, that's actually a good formula. Couple that with the fact that most of our properties are coastal with ocean views.
Wow.
Well, now you kind of have like a nice little recipe that you built up for yourself there.
Yeah.
And so there was a tremendous diseducation and re-education process that had to take place with these people. So whereas it would be, 1 or 2 conversations, we were having 4, 5, 6 conversations with some of these investors, just helping them get to an understanding of why we're doing what we're doing. But contrarian thinking is very hard because the headlines, they come fast, they come furious, and they're very opinionated today. They're less factually driven, and they're driven a lot more on what is the actual author of the article or the journalist trying to convey with respect to their perspective on it, not necessarily what do the numbers show. And that's changing it's directing a lot of people's mindsets, and sometimes, like you said, in the wrong direction. So when you raised your $8 million, did you have a hard time explaining to the investors at that time?
Or was it more of a sophisticated investor?
We've been educating for 20 years, and I think my followers kind of know what I'm going to say and understand it. But in 2023, it wasn't just the headlines. It was our own Federal Reserve. Yeah. They said that we were going to see a recession. So it was a scary time, not really knowing where things were headed. I remember doing a presentation saying, if you type in recession, if you Google it, all the top bankers, they were all like, it's happening this year, because that's what the Fed was trying to do. That was their effort in raising rates as quickly as they could, is to slow down inflation, which often will cause a recession. So for you to look at factors beyond that, and I think that's what I look at too, because I was seeing those same headlines, and it is scary. It's terrifying to be managing someone else's money at a time when our own officials are freaking out or don't know what's next. But I would look at the fact that, at least in my industry, housing is its own animal. It functions differently a lot of times than the main economy. Now, in 2007, which is a very recent, or 2008, a very recent massive housing crash, that was unique and different because it was caused by housing. It was caused by fraud within the mortgage industry. Hands down, that's what happened. But in 2000, I forget when it was, when Dodd-Frank came out, but shortly after that, they tightened everything up, and lending became anything but fraudulent. Like it is so strict now. So I knew that. I knew that we weren't in a fraudulent environment. I knew that we had a massive population needing housing. So even if a recession was coming, people have to live somewhere. Yeah. People, and if maybe they can't buy, but they want to live so they can rent. So keep your rents where the average income is,
right,
and you'll have plenty of people that need what you have.
And also in 2008, though, the Fed, yes, the lenders themselves did a lot of bad activity, but it was also the Fed's activity that helped accelerate that problem that we went into, right? Because they were looking at the bank saying, you guys, you've got to dump these assets off of your balance sheet, and you have to do so quickly.
Yeah.
Because we have to mandate you to a liquidity standard.
Yes.
And now, or at least, with
that
COVID, that changed, they're slow rolling. They're saying, okay, guys, you can slowly liquidate your balance sheet.
Right.
Don't dump everything at once. Don't create a flood in the market. And so they learned from their mistakes. So the 2008 recession was due in part to what the lenders were doing, and also due partially to what the Fed's response was to that actual problem.
And continuing.
Correct.
And
Because
continuing.
we would see a banking crisis right now.
Right.
There are enough people, not in residential. Residential is as solid as it could be. People are in fixed rate mortgages, low payments, high equity. They had to show everything they have in order to qualify for that loan.
Yeah, we don't get that long-term debt like them.
Residential is solid. Anyone that thinks there's a housing crash needs to listen to my podcast, because there's not a chance. But in commercial, it's going through what residential went through in 2008 when everyone was unadjustable. And many commercial owners cannot make their payments when those payments adjusted to much, much, much. You think it's bad for your payment to go on a single family? Wait till you have a $50 million loan that just adjusted to 2 or 3 times higher, along with insurance. So normally you would see banks collapse, but because of what you just said, the banks have said, wait, maybe we can just extend. Maybe the loan's not due now. We're going to give a little. They're finding ways to not to avoid these kind of crashes.
Do you think they're delaying the inevitable, though, or do you think they're correcting the problem from ever happening because of their strategy?
It's very hard to say, but it seems intuitively, that the Fed is trying to avoid major recessions. And they have now opened a valve they don't know how to shut, which is let's just spend our way out. Let's just create more money to fix the problem. That is, guys, I can't believe this isn't talked about more. 7 trillion. I don't even know how to write that. Honestly, I'm not sure I know how to write 7 trillion or even how much money that is. $7 trillion was created in the U.S. in 18 months. It's the same amount of money that was circulating in entirety in 2007. The entire economy of 2007 was added to our economy. How does there not be an impact from that? And that's how inflation was created, and it's why we have so much debt. There is no possible way to pay off our debt. The only way to do it is to keep printing more money. And in that scenario, sadly, this is devastating to people on fixed incomes. It's devastating to the lower, the middle and lower classes that are I hate using those words. I don't know how to say that. But people, the lower income families that are on fixed rates and where the price of eggs matters. And, the more we print money, the more money you need to pay for those eggs. The more money you need to pay. It's not like the thing went up in value. It's just that you need more dollars for it. So we are in a situation caused, in my opinion, by our government that is going to keep having money going towards assets and keep making it more and more difficult for people on fixed incomes.
Yeah, fixed incomes, I think, get crushed the hardest with inflation. I guess the question I have for you is, we're in a very unique political time, right? Big election in front of us. And now that Kamala is the front runner for the Democratic Party, I'm assuming that her outlook is going to be similar to President Biden's, in that how you get out of this scenario from a debt standpoint is higher taxes, right? And then if you look at what I would say Trump's outlook is grow your way out of it, right? Which one works, or do neither of them work?
I think, I'd like to blame it on a party, but it's been all of them.
Totally.
It's not, let's just face it, there's the Democrats and the Republicans. Democrats tend to be pro higher tax, and Republicans tend to be higher growth. That's just always been the fight. And it's the beautiful balance of our country. You can't have one be in too much power. It's the balance of power. So I love the differences. I love our differences. It was typically that the Democratic Party was for the workers, and typically the Republican Party that was for the people providing those jobs. And if any one of them has too much power, then you're going to kill the jobs or you're going to kill the workers. So that balance of power is necessary. Unfortunately, because this valve is opened that says we can fix our problems by just printing more money, we can give more money to the workers, or we can give more money to the employers. Either way, that results in debt. And that's where we're at. So regardless of who was in charge, I believe it was Bush doubled the debt, and then Obama doubled the debt, and then Trump, they're just all spending money.
Right.
On different things, but they're spending the money.
Yeah. So like I mean, this is a very simple and basic way to look at it, but I always looked at it as, what would I have to do? If I was in debt, what are my options? And it's cut back your expenses or make more money, or a combo of both, right?
Yeah.
I guess my question is, and Michael kind of presented it this way as well. Do you think it's beneficial that we try to limit the downside or the pit of a recession by doing things like not forcing, assets to flood the market and allowing banks to, slow roll it out? That definitely can keep a floor at how low it can go. Yeah. But it also, you have a slow growth off of that as well, right? Like the 2007 recession, it could have actually been deeper, yes. But in theory, we could have rebounded much faster. Yeah. So I guess my question to you is, are we so scared of pain from a recession that we try to stop it from happening? And by doing so, are we making the overall problem worse? Meaning assets are everything's too expensive. Yeah. You never see the true correction.
Yeah, I don't think anyone has an answer to how we're going to get out of this problem. There's nobody who knows, and that is scary. I said that the U.S. created at least $7 trillion. The world created $20 trillion. The world, it's not just the U.S., it's a worldwide phenomenon of the central banks have discovered they have a valve that creates more money to fix problems. And then when that happens, politicians want to please their constituents and they want to give them more things. Whoever their constituents are, it's like, I'm going to give you what you want so that hopefully you'll reelect me. And that, again, that valve is open and we don't know how to close it. So
that I think is the crux of the problem.
Yeah,
right
I agree.
It's that none of the politicians are willing to make the difficult decisions that create pain for their constituents.
Yeah.
With the expectation that we have to go through a cycle of pain to get to a point of prosperity. Instead, we're going to limit the pain. We're going to try to make it as least impactful for you as possible. We're going to come in and help the problem, but we're actually going to extend the existence of that very problem for a lot longer and make it way more difficult for you to achieve anything for yourself. And it's kind of like a free market versus, big government argument. Like, what is the right decision?
Yeah.
Unfortunately, I don't think our politicians are driven to do what they necessarily think is right, as opposed to driven to do what keeps them in office for as long as possible.
I think the Social Security and Medicaid, Medicare, that's like probably the most obvious one right now. And it's actually the interesting part. It's not totally the politician, right? The people don't have the desire for it. Like if you look, right, these programs are exploding in front of us, right? Like Social Security's got 9 more years and it's done, right? We have things that are not sustainable, right? And if you notice, if a politician says anything about restructuring it, the opposing party goes immediately towards marketing to more of the seniors. He wants to get rid of, or she wants to get rid of Social Security and
they're
Medicare,
going to put you
Medicaid.
In the street,
and you are immediately not getting elected. You're out of here, right? So now you have a situation where what needs to happen, it inevitably has to change. Like we don't have something that's sustainable, yet you can't go anywhere near it.
Yeah.
But where I agree with you, it's mostly the politicians. It's mostly the game. Yeah. This one just seems to be one of those scenarios where
the interest payment on our debt alone in the next 5 years is going to be half of the budget.
Yeah.
How are we going to pay for that?
So let me ask you this: 100%. Do you think is there a potential that AI becomes so productive that we truly are able to grow ourselves out of this? Or, is this now tying into Dalio's books and, the debt crisis is real and we don't have much more time?
I think that we're on the precipice of just incredible growth. We've got you're right, like AI is scary in some ways, but in other ways, we're going to find solutions to a lot of things that our human brains can't figure out. Right. Whether it's medical advances or pollute, how to fix the environment. Maybe AI will just wipe out humans to help the environment. I'm just kidding, but not really. But I do believe that through AI, we're going to figure out how to build houses more inexpensively.
Right.
Maybe politicians will be able to lean on AI to be like, oh, this is how finance works. But I do believe we're on this is an exciting time to live, and despite all of the fear and the infighting in America, I'm old enough to know that that's not new.
Right.
I was born in the '60s. Do you think we didn't have problems then? You didn't have the hippies versus the warmongers. I mean, I was there when Reagan got shot. I was a senior in high school. We've always been fighting, but we're also we're an incredible country. Yeah. We're a melting pot. We've got some of the brightest minds. We are the center of AI. So I do believe the future is here in America, and I'm going to choose to believe that it's a beautiful future, and that we unfortunately have so much information that is creating more of this chasm. It's always been there. It's just that we couldn't. When I was young, I couldn't tell anyone what I thought. Now everyone can. Yeah. It wasn't like I could have a stage when I was 18 to tell the world what I thought. So it's just, we will get better at dissecting information. It's just new. Right. It's new that we have this much information and we don't know what's real right now. Right. But we will.
Yeah, I love that outlook. And I agree. Like this is an exciting time to be alive in. Yeah. And I'm naturally optimistic. Like I think our future is actually going to be pretty awesome. One thing I want to ask you, now we're switching from like optimism to just like dire darkness, for the housing situation, because there are so many states that are in a housing crisis. We're in California. It's insane here. The youth, the Gen Z or early and millennial that's like, I want to buy a home. It's impossible. I will never own a home. What would your advice be to them?
It's never been easy. It's never been easy to buy a home. Like I said, 27 years ago when Rich and I got married and we're trying to buy our first home, we had no idea how we could do that. We did it through solving a problem and by renting out every room in the house. My daughter is a millennial. She's 31. She owns $1 million house here in California. How did she do that? It wasn't easy, but she saved her money. She worked hard, and she used the FHA loan. People are really surprised that there is such a thing as an FHA loan that allows you to put 3% down. Now, 3%, there's a limit in California, and 3% of $1 million is still a lot of money, but it's doable. You just have to stop going to concerts in Europe all the time. I was young, and I know what it's like to have a good time. Somehow my daughter, she's my older one, we talked about it earlier, she listens to me, she saved her money. She still had a good time. You can have a great time without just throwing your money around. She saved enough money to buy a home. She has 2 children now. She has a husband, and they are in a fixed payment. They don't have to worry about rents going up anymore. And they have a home where they can raise their children and not be kicked out if someone feels like selling it. So in my opinion, do whatever you have to do. I think I said earlier, I rented out every room in our house to make it work. And eventually, as we made more money, we could kick out one tenant and take over that part of the house. But it's never been easy. And I just read recently, look, go back to the 80s when interest rates were 18%. How do you think first-time buyers felt then? So there's always a challenge, and there's always a way to overcome that challenge and find out what your options are. There are absolutely low down payment loans. If I ever hear someone say it's hard to come up with a down payment, I say, you haven't done your research. It's easy. There are programs for you. There was an issue where there is tax credits and support for first-time home buyers, and they're not getting enough takers. I don't know why, but go do your research. Find out. If you want it bad enough, you'll be able to do it.
So I have a question for you about that. When I talk to a lot of people, what I hear is the disparity between the delta between your income and a home price was here. 30 years ago. Today, your income is here and the home price is way up here. And my response to them, and I'm curious to hear your thoughts, is yes. However, 30 years ago, interest rates were much higher than they are today. So the delta between those two are driven primarily because the cost of the money of your financing is so much less so that you can actually afford more. So their counter response is, yeah, but interest rates are back to where they were. Not quite, but they're a lot higher. And so do you see a point where prices have to correct in order to bring that delta between income and affordability back to, I'll call it, some degree of equilibrium?
Yeah, so it's a good question, and I think the Fed has been trying to crash the housing market, and they've been unsuccessful. And the reason for that is because housing is a huge component of inflation,
Right.
and he said, a couple of years
30%
ago,
of the index,
It's the
isn't
largest
it?
factor, I think,
yeah.
right?
Jerome Powell said we're going after housing and it's going to be painful. And here we are sitting here today, several years later, with the highest home prices in history. So he was wrong. Again, it's hard to predict the future. I wouldn't want his job. He has to try to tame the politicians who want to spend the money that he has to, manage. But in answer to your question, tell me a scenario where someone like me, the baby boomer generation is one of the largest in history. It was only 10 years ago that the headlines were baby boomers don't have enough money to retire. And people were feeling sorry for that generation. Now people are just pissed at that generation. And it's just funny to me. It's like, would you rather them be broke or would you rather them be able to retire? What's your choice? You want a bunch of sad old people? Or would you like them to be able to take their RVs and go travel and spend some money and keep the economy going? Well, over the last 10 years, it's been robust, and baby boomers are sitting in a better position. Many own their homes free and clear. You also have people like my daughter, her mortgage is cheaper than rent. So tell me a scenario where these homeowners are going to just decide to sell the incredible gold ticket that they have.
Yeah, they create. We created a country of passive investors in real estate, just driven by low interest rates.
Yeah, and that's the funniest part. It's so interesting because you just said the Fed tried to crash the housing market. The Fed did the opposite, right?
Yes,
Because
exactly.
when you lock everyone in at 2% 30-year fixed debts, and then you raise rates by 3x, no one's selling anything.
So because you want to sell your house with your $2,000 payment and get a smaller house for $4,000.
Exactly right.
You're not doing that.
So it's exactly what Michael just said.
Yeah.
The Fed single-handedly created the largest group of real estate investors America has ever seen.
Yeah.
These were primary homeowners that never looked at real estate the way we do.
Yeah.
And all of a sudden they're like, oh, 2% debt. My payment is half of what rent would be. This thing is an asset now. If I want a new home, that's staying. And I'm going to either refi or get capital to buy the next. Now they're thinking like real estate investors, right? But that's for a group, right? If you're a homeowner and you bought a home pre-2021 or in 21, your mortgage is cheaper than rent.
Yes.
If you're looking to buy a home today, it's the exact opposite by a significant amount.
Yes.
Right? So like in my neighborhood, starter home is $1 million. Rent on that is probably going to be $5,000 a month, $500 a month. Mortgage would be almost $9,000 a month.
Yeah.
$8,500.
That's my
So you got a
daughter's
big
situation.
delta, right? I was with somebody yesterday who has a home in LA, $2 million home, rents it out for $8,500, which I thought was undervalued. But he rents out for $8,500. He was like, dude, for a mortgage for that thing, it's $15,000 a month.
Yeah.
So the incentive right now is actually to rent, I think, for the let's say the Gen Z, early millennial.
Yeah.
The question just becomes, what happens when rates start coming down a little bit more? I don't think they ever touch 2% again.
Yeah.
But what does that do? Does it
I
change
was
everything?
just gonna. You just fed me the question. I was just ready to answer. This is a moment. This is the moment where if you would like to be in the housing market, this is the time. And I know everyone's going to say, "Oh, she's a real estate agent," and I am, but I'm not. I'm not buying your house. I'm not representing whoever's listening. So this is not going to benefit me by saying this. That as contrarians, you go against the grain. We know mortgage rates are coming down. We're in a pivotal point here where the Fed is going to start cutting rates. We're in a reverse cycle now. For the past few years, it's been a rate increasing cycle. Now, and that was meant to slow down the economy. Now it is widely agreed that we're reversing that, and the Fed is going to start cutting rates. That's a stimulus. It's a stimulus to the economy because when money becomes cheaper, people buy more stuff. Money's been expensive, people buy less things. As it becomes cheaper, it's gonna rev up the economy again, and that's why the Fed's freaking out about cutting, but they're gonna do it. They have to do it because job growth is slowing down. So in this moment, at this top of this pivot, you have an opportunity because the world doesn't understand this. You can get your high-end, mortgage rates are already coming down. They just came down again today.
Right.
They're going to keep going. That's going to open up the door to millions of more people who can't afford. Can 15 million millennials at first-time home buyer age buy? No. But do you know how many homes are on the market? It's like a little over 1 million. It's still way, way lower than it needs to be, the amount of homes on the market. So do you think there's 1 million out of the 15 million millennials who want to buy who could afford as soon as rates come down? Yes. So it's just, you've got this tiny bit of housing inventory and this massive group of people, and every time a rate goes down, a few more go through the door. Right. And that's where we are. You don't need a lot of them to be able to get through the door. So it's...
Yeah, I actually do not agree with him in that it's better to rent today than it is to own. I'm of the opinion that assuming you could do it, and granted, that's a big if, but assuming you could do it, you buy in this high interest rate environment and you play the waiting game.
Yeah.
And then when rates drop, even if they get cut in half, or let's say that they don't, maybe they go down by 200 basis points, you now have a refi event and you drop your monthly expense on that house, and your prices, the value of your house is going to go up because of the low interest rates. And so if you can afford to make that play and just bite the bullet for what I think maybe 2 years, 3 years, and again, this is all speculation, right? But if I think that the rates are going to come down, that's my assumption. I'm of the opinion, if you can afford the interest rate and the interest payments, make the purchase, because I think you will end up benefiting. Rates come down, you refinance, the cost of your house goes down, and now you're in a good spot. But if you wait until the rates come down, homes usually, they have the inverse relationship with interest rates, right? Like home prices run like this based on a fixed interest rate. Rates go up, prices go down. Didn't happen because of lack of inventory. So we stayed here. Well, now if rates go down, the prices are still going to go up, in my opinion.
Oh, yeah.
So I want to lock this in.
Yeah.
Right? I want to lock this value. I'm less interested about payment. I'm more interested about value. Yeah. So again, if you can afford to bite the bullet, I think the better play is to buy even in this high interest rate environment.
Yeah.
Yeah, see, I kind of have a twisted view a little bit on just renting in general.
Yeah.
Because I actually, like for me, I felt like one of the biggest mistakes I made when I was young was buying a home. Right? Like I bought a house in 2005. I wasn't very educated on real estate or even investing in general. And I was just always told that owning a home is your best investment. And then now, fast forward 20 something years later, if I were to go back, I wouldn't have bought a home back then. I would have continued to rent and bought an investment property.
Yes.
So that's kind of what changed for me, is that like I should have been buying investment properties first, renting where I lived, and got this thing to a point where the properties would then support the cost of living, and then bought on the back end, right? Now, that's not normal. Like most people will never do that. And if the decision is I'm going to rent until I can buy a home and there's no investing in the interim, you're totally right. You buy right now, right? Because the prices, especially in somewhere like California, prices aren't going anywhere but up. So get in, right? This is the right time to get in. But if at least you were on the path that I should have been on at 22, that's what I would have done. Or I would have house hacked. I probably wish I would have done the duplex or the quadplex house hack. That would have been awesome.
I mean, most people don't have a chunk of money. If you've been successful at something in like the top of your class, like you were, and you have a chunk of money from that, then you can invest. But most people are just struggling to come up with that down payment, and buying your first home is the easiest, is the cheapest money and the lowest down payment. So again, like the average California, I'm not talking about California as its own unique animal and very, very hard to get in this market. Always has been. That's never not been the case. But if you're in anywhere else where the average home price nationally is, a little over 400,000, what's 3% of that?
Yeah, not that much.
So people can do that. It just means cutting back on certain things or working the side job, doing a little Uber, whatever it is you need to do.
Right. And the other thing, this is kind of where I went to the house hack. If you go after a quadplex, you get the same first-time homebuyer program that you would a single family.
Yep.
Right? You get the 3.5%.
And now you're an instant investor.
Bingo.
Or you buy a big house like I did and rent.
Yeah, yeah. I tried to do that. Like I bought the house, I put all my boys in it, and it became a party house. It was a little bit not what I was hoping for. But one thing I want to get your opinion on, because whenever I talk about real estate pricing in Iowa or Arkansas, it's very different than California, right? You can find homes for $200,000-$300,000. And, on social media, I'll get, but no one wants to live there. I'm not willing to live there. For the person that's living in California that is basically like struggling to get by and might not ever buy a house, would you recommend them just tough it out here and rent for the rest of their life? Or do you think they should look at other areas that are different than California, but they can actually own something?
Well, technically, anywhere is cheaper than California.
For sure.
You're literally living in one of the most exotic, beautiful places in the world, and it's expensive. And there's a reason it's expensive. So, but it is really important to understand the market, and I would definitely not recommend anyone invest in a market they don't understand. There are markets that will never do anything. You could be just wasting your money if you buy in a market where, I don't want to pick on any place, but let me see if I've got one. Let's just say a place that isn't bringing in new business, it's declining in population, not growing. There's nothing happening. I'll say Jackson, Mississippi.
I was wondering where you were going to pick.
I'm going to pick Jackson because a lot of people go there for the cash flow because it's so cheap. Listen, Jackson, I'm sorry for anyone who lives there. As far as I've seen, maybe it's changed, there isn't a lot of new growth happening. So you could buy a property there for maybe $100,000. What a deal! But then, and so you're having to put $20,000 down if you're going to buy it as an investment property, and it's going to cash flow a little bit, not much on today's rates. But what happens if if it's an older home and it has a big capex problem? What if you have to change like the roof or the plumbing or something like that? This happened to me in an Ohio property. It was like $24,000 to fix the plumbing issue because it was an older home. That wiped out about 2 years of cash flow, and that property never really went up in value. So you can get yourself in a lot of trouble buying a cheap home in a market that's dead or are just stagnant because housing costs money, insurance is going up, expenses are going up, and if the value of the property is not going up, you're losing money.
Yeah, there's a reason why the cap rate is like a 12.
Yeah.
Yeah. So and a lot of people are just fixated on the opportunity of a 12 cap rate, not realizing a higher cap rate also comes with risk.
Yeah.
Right? Like you are playing a riskier game. When we talk about California, they're like, shoot, why would I invest in a 4 cap market when I can get an 8 cap in, I don't want to dog another market, but let's say somewhere in Tennessee, right? I can get 8 cap in Tennessee. Okay, that might work for cash flow right now, but you're going to be limited on your growth and appreciation. And to your point, if you have issues, that's going to eat into years of profitability for you. Mm-hmm. So,
and I know it firsthand because we had a single family rental fund, and I had been preaching for a while cash flow. Probably when you were listening to me in the beginning, it was all about cash flow. And then we did a fund where, again, I raised, I don't know, 10 million or something, and I did what I was preaching, which was to buy low cash flow properties in Florida. They just covered their expensive, no extra cash flow. And then high cash flow properties in Detroit and Ohio. And I'd always told people, get some cash flow, get some growth properties, it'll balance itself out. At the end, when we sold the properties after 5 years, the Florida properties had gone up so much in value. And even though they didn't cash flow a few $100, what's a few $100? They went up $100,000. All said, it was about a 28% IRR on the Florida properties. On the Detroit ones, by the time we got them fixed for sale and the time it took to sell, it's a slow market, it was maybe 4%.
Yep.
So 4%, you could put it in the bank today and get 4%. Why take the risk?
Yeah, it's such a, so I grew up on Rich Dad Poor Dad.
Yeah.
Like I came away from that book going, give me the income,
Yeah.
right? And I have such a different outlook today. Like
Yeah.
it's great getting passive income, and you get to a point in your life where that's all you want because you're truly living off the income,
Yeah.
right? But like I put myself in a scenario where like the income would come in and I didn't need it, and then I'm like, okay, well, what am I doing with this?
Yeah.
And so I've kind of shifted, both of us have actually. The cash flow is maybe just the lifeblood of the asset. You need it to pay the debt. And,
Yeah.
It's definitely going to show if you have a good asset in front of you. So you don't want to be underwater. But like we're on wealth build. It's like,
Yeah.
how do we double our money over and over and over?
Yeah.
Let's get through that when I'm in my 30s, 40s, and 50s. And then if I want to talk about cash flow, let's do it on the back end. But
Yeah.
so many young investors focus on cash flow.
Yeah.
And you're like, dude, you're missing out on like 10% of potential return.
Yeah.
And that's the difference of you doubling your money in 4 to 5 years versus 9 to 10. You
Yeah,
know?
when they
They'll
talk
figure it
about
out.
when they talk about
They'll
cash
figure it
flow,
out.
when they,
Yeah, that's
when they
right.
come in and talk to us about our deals, because we are growth plays, right?
Yeah.
We buy distressed assets and we build,
Yeah.
right? And so our investments are typically, no income for a few years, but we're not playing that game.
Yeah.
We're looking to appreciate the capital. So when investors come in and they say, well, I ask them, what is it that you want? And they say, well, I want income. And I look at them and say, why? You're 28 years old.
Yeah.
You make good money. Why do you want more income? What is it good to do for you other than increase your tax basis?
Yes.
I don't know. I'm not really sure why I want more
I
income.
don't know,
I
yeah.
just keep hearing cash flow, and I don't want to. Are you planning on retiring in 2 years? No. Then this concept just makes no sense to me at this point.
Yeah.
And I've maybe criticized some of them more than I should have. But to their understanding, you're hearing cash flow and cash flow and it's everywhere. But defer short-term gratification for long-term gain, especially if you're young, in my opinion, is the only way to go.
Where it's at.
That's right. And then as you get older and time progresses, you then start to shift, right? Then you start looking at more cash flow and less appreciation. But there is an evolution there that is very much at play.
Yeah.
But there's a lot of, to your point at the beginning of this conversation, there's a tremendous amount of misinformation out
That's
there.
right.
Yeah.
Let's end it on this.
Okay.
Where do you think are the best states to invest right now in America? What's your favorite states?
Yeah, it just depends on what you're trying to do. But if it's what you just said, which is, if you're young and you're trying to retire yourself, the financially independent thing that's so popular, you just haven't found your thing, because we are driven to do things in the world, not just sit around and play games. So it's like find your thing and love it, and you'll make money from that. In the meantime, building your fortune is so important, because eventually, in order to be FI, you need a few $1 million. You got to get to the point where you have a few million. You need to take like 5, 6, 7%, whatever you think you can get on your money. That's what you'll be living on. So you've got to get to the point where you've got a few million, and before you should be thinking about cash flow. So with that, I follow population growth, job growth. Well, it's really job growth, because that creates the population growth. Infrastructure growth, because there are a lot of cities that are spending billions of dollars to revitalize, to grow. And if you can get in front of that wave and you buy something of quality, I'm done with older properties unless you're just really fabulous at repairs. I don't do that. I'll even buy brand new. I'll pay retail. I don't care, because I know I'm in front of the wave. And I am a surfer, so I can say that. When there's a momentum behind you, you just get to enjoy the ride. So that's how I look at real estate too. I'm going to buy these little assets that I don't have to worry so much about. They're kind of passive, not totally, but pretty passive, because they're newer. And then I can focus on my income and the things I love to do and put my focus there, knowing that I'm growing these assets in front of this wave of growth. So to answer your question, that growth is very much in the Southeast. That's where we're seeing a lot of job-friendly markets like Florida and Texas, and kind of anywhere in the Southeast tends to be a little bit more employer-friendly. And if it's employer-friendly, you're going to have employers moving there. That's what we're seeing. And it's still pretty affordable. Also, we're really seeing the Midwest. It's not going to ever be as popular as some of the sexier markets, but Columbus is a great market. It's in Ohio, but it's young and vibrant. There's a college there. It's growing. There's chip manufacturing going into different parts. North Texas, I love an hour north of Dallas is where all this chip manufacturing is coming in. So and then another market that we're just crazy about is San Antonio, because a lot of the reshoring that's happening, it's still expensive to do business in America, but it's also really expensive to import it from China, especially if there end up being tariffs. So a lot of the growth is now kind of leaving some of the areas where you have to ship. We learned during COVID that trying to ship things is not the best way to do business, and we don't control what we need. We need to be able to have the medicines and the things that Americans need to live on and not be so dependent. So a lot of those companies are moving to Mexico and for their factories and just crossing the border. It's easier, no ships needed. And that transportation hub is going to go straight through San Antonio. So I'm doing build-to-rent communities there. We're helping investors buy there. San Antonio's hot, and it's a little bit cheaper than Austin. So a lot of those Austin businesses that have gotten priced out are moving towards San Antonio. This is the fastest part of the country, fastest growing part.
All right, everybody, you heard it here. Kathy, Fettke, that was an absolute pleasure. Everyone, if you're not, maybe I'll tell you guys to your face, if you're not listening to Real Estate News for Investors, I'm telling you, I'll be the testimonial. It's a phenomenal podcast. It will keep you informed on a almost daily basis. If anybody else wants to follow you in any other way, how can they?
realwealth.com is our website. And like you said, the Real Estate News for Investors. I wrote a book called Retire Rich with Rentals that you can find on Amazon. And then Rich and I just wrote a book for BiggerPockets. I'm also a host of some of their podcasts. And we wrote a book that's coming out in September called Scaling Smart. So the idea is like some of these young people are trying to grow too fast and then imploding. So like how to grow a sustainable business.
Everybody be on the lookout. Thank you so much.
Thank you.